In this video, we're going to talk about the top 10 pharma and healthcare stocks for 2022. So before starting, please like this video and subscribe to the channel for future updates. Number 10, Royalty Pharma PLC, NASDAQ, RPRX. Royalty Pharma PLC is a major buyer of biopharmaceutical royalties in the United States, supporting biopharmaceutical innovation. Academic institutions, research hospitals, and not-for-profits, small and mid-cap biotechnology companies, and pharmaceutical companies collaborate with Royalty Pharma PLC, NASDAQ RPRX. They issued a 19-cent per share quarterly dividend on January 6th, an increase of 11.8% from the previous payment of 17 cents. The dividend will be paid on March 15th to stockholders who are registered by February 18th. After the company's excellent Q3 results, Tigris financial analyst Ivan Feinseth boosted the price target on Royalty Pharma PLC to $52 from $50 and maintained a buy rating on the stock on December 17th. Its price objective offers a potential return of over 36% from current levels, according to the analyst, who expects a lengthy runway of investment opportunities, generating considerable growth in revenue, cash flow, and dividend increases. Number 9, Sage Therapeutics Incorporated, NASDAQ SAGE. Sage Therapeutics Incorporated is a biopharmaceutical business based in Massachusetts that develops drugs to treat central nervous system problems. Needham analyst Ami Fadia raised the price target on Sage Therapeutics to $85 from $79 on January 6th and maintained a buy rating on the stock, labeling it a Needham top pick for 2022 and confirming its place on Needham's conviction list. With many pipeline triggers, the analyst is optimistic about the stock's setup this year. Sage Therapeutics had 22 hedge funds bullish in the third quarter of 2021, down from 27 firms the previous quarter, with 1.25 million shares worth $55.6 million. D.E. Shaw has the highest investment in Sage Therapeutics. Number 8, Bio-Rad Laboratories Incorporated, NYSE Bio. This is a maker of specialized technology solutions for the life science research, medical laboratories, and clinical diagnostics sectors based in California. They reported earnings per share of $3.21 in the fourth quarter, beating expectations by 34 cents. The company's sales for the quarter was $732.77 million, exceeding expectations by $825,500. After the Q4 results, Citi analyst Patrick Donnelly boosted the price target on Bio-Rad Laboratories to $800 from $750 and maintained a buy rating. In a positive statement to investors, the analyst stated that the firm guided 2022 far ahead of forecasts. Number 7, Teladoc Health Incorporated, NYSE T-Doc. They provide virtual healthcare services to businesses in the United States and abroad, including medical opinions, artificial intelligence and analytics, and telehealth devices. Citi Motz of Goldman Sachs commenced coverage on Teladoc Health on February 11th with a buy rating and a $121 price target. Teladoc Health, as the global leader in virtual healthcare, is uniquely positioned to improve the total integration of digital into healthcare, paving the way for the healthcare technology sector to become more disruptive. According to the analyst, the National Labor Alliance of Healthcare Coalitions, the biggest alliance of labor unions and labor management coalitions, announced an expanded agreement with Teladoc Health on December 16th to offer its full suite of virtual care products and services. Number 6, Seagen Incorporated, NASDAQ SGen. They are a biotechnology business situated in Washington that develops antibody-based cancer medicines. In the third quarter of 2021, 40 hedge funds monitored by Insider Monkey were positive on Seagen Incorporated, up from 37 funds the previous quarter. Seagen reported a 95-cent loss per share in its fourth quarter earnings report on February 9th, missing projections by 8 cents. Revenue for the period was over $430 million, which was $28.18 million higher than expected. On February 11th, Oppenheimer analyst Jay Olson decreased the price target on Segan to $162 from $198, but maintained an outperform rating, while Segan reported strong Q4 financial results overall with $176 million in Adcitress sales. Management expects Tukysa sales to decline in 2022, according to the analyst. Despite the disappointing projection, he remains hopeful about long-term growth with significant label and geographic expansions in the near future. Number 5, Zimmer Biomet Holdings Incorporated, NYSE ZBH. They are a medical device manufacturer based in Indiana. Its projects include orthopedic, reconstructive equipment, and surgical instruments. Zimmer Biomet Holdings Incorporated released fourth quarter earnings on February 7th with an EPS of $1.95, below projections of 3 cents. Zimmer Biomet Holdings reported $2.04 billion in revenue for the quarter, missing market consensus by $28.63 million. On February 7th, Zimmer Biomet Holdings Incorporated announced that its board of directors declared a pro-rata dividend of 80.3% of the outstanding common stock of ZimV, its dental and spine business's spinoff to Zimmer Biomet Holdings. Shareholders of record on February 15th. The dividend will be paid on March 1st. On February 9th, Loop Capital analyst Jason Witz lowered the price target on Zimmer Biomet Holdings to $140 from $165 following the company's Q4 earnings miss and F22 guidance, but maintained a buy rating on the stock. Zimmer Biomet has a more conservative approach to COVID-19 than its peers, assuming another full year of impact from the pandemic, while its peers expect at least some easing in the second half of the year. Number 4, Anthem, NYSE ANTM, the largest managed healthcare firm in the Blue Cross Blue Shield Association and provides health insurance in the United States. With $4.5 billion in positions, 59 hedge funds were bullish on Anthem in Q3 2021. As of September 2021, Eagle Capital Management owned more than 2.5 million shares of Anthem, valued at $949.4 million, making it the company's largest shareholder. Anthem released its fourth quarter results on January 26th. The company earned $5.14 per share, topping expectations by 2 cents. Revenue for the quarter was $36.02 billion, up 14.22% year over year, although it fell short of expectations by $436.76 million. On February 7th, Argus analyst Jasper Helweg boosted Anthem's price objective to $500 from $475 and maintained a buy rating on the stock. According to the analyst, the company continues to profit from increased government enrollments, rate hikes, and the expansion of its in-house pharmacy benefit manager, and the shares are also attractively valued. Number 3, Abbott Laboratories, NYSE ABT. Headquartered in Illinois, is a multinational corporation that manufactures and distributes branded generic medications, medical devices, diagnostic assays, and nutritionals. Abbott Laboratories released its fourth quarter financial results on January 26th. The company reported profits per share of $1.32, which was 11 cents higher than analysts' expectations. Abbott Laboratories' fourth quarter revenue totaled $11.47 billion, representing a 7.17% year-over-year increase and above analyst expectations by $760.41 million. Abbott Laboratories issued a quarterly dividend of 47 cents per share on December 10th, representing a 4.4% increase over the company's last payout of 45 cents per share. Investors who held their shares as of January 14th will get the dividend as of February 15th. Abbott Laboratories NYSE ABT price objective was reduced to $143 from $150 on January 27th by Raymond James analyst Jason Bedford, who maintained an outperform rating on the stock. According to the analyst, Abbott Laboratories' business grew by 10% year-on-year in the fourth quarter of 2018, and this growth is expected to continue into 2022 as a result of the company's exposure to two of the fastest-growing medical technology markets, namely diabetes and structural heart disease. Number 2, AbbVie Incorporated, NYSE ABBV. In addition to medical products and clinical trials in immunology, cancer, neurology, eye care, and virology, AbbVie Incorporated is a biopharmaceutical firm focused on virology, oncology, and neuroscience. AbbVie released its results report for the fourth quarter of fiscal year 2015. The company reported earnings per share of $3.31, exceeding expectations by 3 cents per share. The $14.89 billion in revenue fell short of expectations by approximately $73 million. A buy rating was maintained on AbbVie Incorporated. Shares by Mizuho analyst Vamil Divan on February 4th. The price target for AbbVie was raised to $166 from $154 on February 4th. According to the analyst, AbbVie has a diversified growth story outperforming expectations in the fourth quarter. He believes AbbVie is a top pick for the foreseeable future. Number 1, United Health Group Incorporated, NYSE, UNH. They are a multinational insurance and managed healthcare corporation headquartered in Minneapolis, Minnesota. Among clever investors, United Health Group Incorporated is one of the most popular healthcare companies, with 95 funds owning shares in the firm as the third quarter of 2021, totaling $11.70 billion in value. United Health Group Incorporated reported fourth quarter results on January 19th, declaring earnings per share of $4.48, a 17-cent increase over analysts' expectations. The sales of $73.74 billion exceeded expectations by $774.36 million, or 7.4%. United Health Group Incorporated issued a quarterly dividend of $1.45 per share on December 2nd, the same amount as in the previous quarter. The dividend was paid on December 14th to owners who had registered their shares by December 6th and were eligible to receive it. According to SVB Leerink analyst Whit Mayo, the price objective for United Healthcare Group Incorporated has been lifted to 5. So what do you think about our video? Let us know in the comment box below. Please do like the video and subscribe to the channel for future updates.